You're watching the Retirement Halftime Show. I am your host, Alexander Joyce. With me today is Tim Ayers. We are talking mortgages. We get a lot of questions, Tim, as you know. I do, you do. When I get the questions, I'm always asking you, so you get them all. The differences between mortgages. Should people be getting an FHA, a conventional? They've been in the service. Is a VA good for them, right? They're farmers. What kind of things should they get? And so I wanted to jump in both feet, Tim, to conventional loans, conventional mortgages. Who they for? How do they work? Right? What are the benefits? The disadvantages? Should we be looking at something different? Tell us a little bit about conventionals.
Well, conventional mortgages are generally generally easy to get. There's not a lot of differentiation between that and maybe an FHA, except the pricing is a little higher because they're not guaranteed by the U.S. government. But on the reverse side of that, their PMI is much lower because you're a much better qualified individual, qualified borrower. The credit scores on a conventional mortgages generally need to be in the 680s or better. I mean, we can go lower, but then the pricing gets a little worse. And so that's where a good mortgage broker will help you out and help you figure out which kind of mortgage would be better for you, a conventional or an FHA, maybe USDA or something like that.
Got it. So, I think that's exactly why we're doing this, because people are confused, right? And I think that the bottom line question, and we've got a form, for this to give to people. It's like, here, a conventional loan, here's the 3 things you need to know, right? Let's simplify this thing. FHA, 3 things you need to know, right? And so we can kind of get through this, uncertainty about which is best for me, right? Even I'm like, 3% is the max and 5%, I'm an investment guy, right? I look at numbers and I want to make sure that before I do something, the fundamentals are all there. Same thing goes with applying for an asset like your home. Right? I mean, It is an asset, and this is a big decision, a big choice. And to take on that amount of leverage or debt, we have to be certain about what we're doing. And so I really appreciate you kind of walking us through the steps of the differences in these mortgages. Is there any maybe top mind things that we should know about, again, conventional mortgages, Tim?
Yes. So, yes, rates are a little higher in conventional mortgages, but again, You're marrying your home. You're going to be in your home for a long term. You're dating your rate. You can break up your date, right?
Yeah.
And when rates come down, then you can lower your interest rate. And at that time, if you have some other debt that you would like to consolidate, you can lower your interest rate and get cash out and pay off your debt, and then maybe start investing some money. And who else to invest it with, right?
This guy.
Rejoice Financial.
Rejoice Financial. Thanks, Tim Ayers. You're watching the Retirement Halftime Show. There is more show to come. The best is yet to come.